Hello friends, the next topic is on section 25, section 25A, 26 and section 27. Section 25 is related to the inadmissible deductions. Section 25A is on the taxability of the income from unrealized rent and the arrears of rent. Section 26, which is the co-owned property taxability, and Section 27, which is regarding the taxability of deemed ownership, which person will be taxable as a deemed owner. Hello friends, the next topic is on the inadmissibility of the interest deduction under Section 25. So, if you are paying an interest income, the interest paid is allowed as deduction in the hands of the borrower under Section 24. However, this interest is also an income in the hands of another person, in the hands of the financial institution. And if such financial institution or if such lender is outside India, in those cases, the borrower has to make sure that the applicable taxes are deducted by the borrower. Only if the applicable taxes are deducted by the borrower, then only the interest deduction will be allowed to the borrower under Section 24 if this interest is paid outside India as per Section 25. So, on your screen, interest payable outside India shall not be deducted if tax has not been paid or deducted from such interest, and there is no person in India. So the sentence, there is no person in India who may be treated as an agent under Section 163. The concept of agent under Section 163 is relevant, wherein the taxes are not recoverable from the non-resident, and accordingly the agent under Section 163 will be held responsible for paying taxes on behalf of the non-resident. What does the barrack says? Notwithstanding anything contained in section 24. So this is section 25 that we are reading. Notwithstanding anything contained in section 24, any interest chargeable under this act which is payable outside India, not being interest on a loan issued for public subscription before first day of April 1, 1938, on which tax has not been paid or deducted under chapter 17B, which is TDS, and in respect of which there is no person in India who may be treated as an agent under section 163, shall not be deducted. The interest shall not be deducted in computing the income chargeable under the head income from house property. So straightforward, if you are unable to deduct the taxes on the interest which you are claiming to be deducted under section 24 and it is paid outside India, it will be straightforwardly inadmissible. It won't be allowed under section 25. Now section 25A is taxes the arrears of rent and the unrealized rent which is received subsequently in the subsequent assessment years by the owner. In those cases, the unrealized rent concept we have already studied under section 23, wherein it was allowed as deduction if certain conditions, if conditions under rule 4 of the income tax rules are satisfied, then the unrealized rent was allowed as deduction from the actual rent received or receivable. Now, if in the subsequent years the owner receives the unrealized rent or receives the arrears of rent, then in those cases the same will be taxable in the hands of the owner in the year in which the same is received, irrespective whether the owner is holding that property or not. And also he will get a 30% deduction, 30% standard deduction on the net annual value. on the screen. Section 25A, Arrears of Rent and Unrealized Rent. As per Section 25A(1), the amount of rent received in arrears or the amount of unrealized rent received realized subsequently shall be deemed to be income from house property in the financial year in which such rent is received realized. In the financial year in which such rent is received or realized, the same will be taxable, whether the assessee is the owner of the property or not in that financial year. Section 25A(2) provides a deduction of 30% of arrears of rent or unrealized rent subsequently. What does the Bare Act says? Section 25A subsection 1, the amount of arrears of rent received from a tenant or the unrealized rent realized subsequently from a tenant, as the case may be, by an assessee shall be deemed to be the income from house property in respect of the financial year in which such rent is received or realized, and shall be included in the total income of the assessee under the head income from house property, whether the assessee is the owner of the property in that financial year or not. Subsection 2, a sum equal to 30% of the arrears of rent or the unrealized rent referred to in subsection 1 shall be allowed as deduction. Now the illustration. Mr. P sold his residential house property in March 19, so it was sold in 1819. In June 2019, he recovered rent of 10,000 from Mr. A, to whom he had let out his house for 2 years from April 13 to March 15. So, Mr. A, there is arrears of rent of 10,000. He could not realize 2 months' rent of 20,000 from him, and to that extent, his actual rent was reduced while computing income from house property. So, the amount received in this case is 10,000. The same was 20,000 was reduced. However, the amount which is realized in the current year in 1920 is 10,000. Further, he had let out his property from April 15 to April 19 to Mr. X. So Mr. X, there is another guy. In April 2017, he had increased the rent from 12,000 to 15,000 per month, and the same was a subject matter of dispute. In September 2019, the matter was finally settled and Mr. P, the assessee, received 69,000 as arrears of rent for the period from April 17 to Feb 19. Would the recovery of unrealized rent and arrears of rent be taxable in the hands of Mr. P, and if so, in which year? The same, yes, the same will be subject to tax as per section 25A. 10,000 will be taxable as unrealized rent. So unrealized rent is 10,000 and arrears of rent is 69,000, and so total rental income is 79,000, which is, and 30% NAV or 30% standard deduction is available in this case. 30% standard deduction on 79,000, and only the net income, that is effectively 70%, will be subject to tax in the hands of Mr. P in the year in which the same is received. So, for example, if he has received the income in financial year 1920, then in the year of receipt, the same will be subject to tax. Now the next concept of the co-owned property, which is defined under section 26, where the property is co-owned or there is a share in the property, then the same share, the same income deduction under section 24B, the same will be apportioned based on the percentage of the co-owned owner. So, for example, if the property is co-owned by the SSC 50-50%, for example, with his spouse, then the income from house property, the interest deduction, the net amount, the net income from house property will be apportioned among the co-owners of the property. On the screen, income from the co-owned property, section 26, where the property is owned by two or more persons whose shares are definite and ascertainable, then the income from such property shall be taxable as house property income for each such co-owner. In case of SOP property, the deduction under section 24B, interest deduction will be eligible individually, that is, each and every co-owner will be eligible for 2 lakh interest amount. A ceiling limit of 2 lakh will be applicable to each and every co-owner. On the screen, annual value of the property of each co-owner will be nil, and each co-owner shall be entitled to a deduction of 30,000 or 2 lakhs. However, the aggregate deduction of interest to each co-owner cannot exceed 30,000, 2 lakhs as the case may be. For LOP property, there is no such ceiling amount. Income shall be computed as if the property is owned by one owner, and thereafter the income so computed shall be apportioned amongst each co-owner as per their respective share. We'll be covering this in detail through illustrations. So, section 26 says the apportionment of the income of the interest deduction should be as per the share of the each co-owners. As per the Bare Act, section 26, where property consisting of building or buildings and lands apportioned thereto is owned by two or more persons, and their respective shares are definite and ascertainable, such persons shall not, in respect of such property, be assessed as an association of persons, but the share of each person in the income from the property as computed in accordance with section 22 to 25 shall be included in his total income. Explanation: for the purpose of this section, in applying the provisions of subsection 2 of section 23, subsection 2 of section 23 is related to SOP property. For computing the share of each such person as is referred to in this section, such share shall be computed as if each such person is individually entitled to relief provided in that subsection. So, the benefit of annual value will be available to each co-owner as per explanation to section 26. Now, illustration. Miss D co-owns a residential house property along with her sister Miss DP. There, her sister's family resides. So, there is a SOP property which is co-owned by Miss D and Miss DP. Both of them have equal share. Both of them have equal share in the property, and the same is used by them for self-occupation. Interest is payable in respect of loan of 50 lakhs at the rate 10% taken on 1st of April 2018 for acquisition of such property. In addition, Ms. D owns a flat in Mumbai. This is the second property in which she and her parents reside. She has taken a loan of 3 lakh at 12% on 1st October 2018 for repairs of this flat. Compute the deduction which would be available to Miss D and Miss DP under Section 24B for assessment year 2021. So there are two properties which is owned or which is effectively owned by Miss D and one property by Miss DP. We have to calculate the interest amount which is allowed in both the assessee's hands. So first Miss D, in her case, if you see, first is the property at Mumbai. There is the first property is both of them have an equal share and which is used for self-occupation. So first property, the interest amount will be the amount of interest, the amount of loan is 50 lakhs, which is at the rate of 10%. So 5 lakh is the interest amount which is payable, and since the first property has a co-owned share of equal percentage, that is 50-50%, so 2,50,000 is the actual amount of interest which is payable, and the same will be restricted to 2 lakhs as SOP property. And for the second property, the interest amount, the loan amount is 3 lakhs at the rate of 12%. 3 lakhs at the rate of 12% is nothing but 3,600, 36,000. So 36,000 is the amount. 36,000. In the second property, we need to mention 36,000. However, the same is restricted to 30,000 as it is on repairs. So the total interest which is available is 2,30,000 in the hands of Miss D. However, since both the interest income are related to SOP property, total interest will be eligible is 2 lakhs in the financial year 1920 for Miss D, and for Miss DP the interest amount is 2,50,000 for the first property, and it will be restricted to 2 lakhs since the same is also on SOP property. So to answer this question, compute the deduction which would be available to Miss D and Miss DP under section 24B. So in the hands of Miss D, the interest deduction available is 2 lakhs, as well as in the hands of Ms. DP the interest deduction available is 2 lakhs, as the same is on a self-occupied property. Now the next concept of deemed ownership as per section 27. The next concept is deemed ownership under section 27. There are certain cases in which the owner will be the deemed owner, though another person is the legal owner, but the beneficial owner being the SSC, the same will be considered that he is the deemed owner under section 27, and accordingly the income from house property will be calculated in the hands of the beneficial owner rather than the legal owner. As subsequent In the subsequent slides, we will be considering the examples which are covered under section 27 on the screen. Deemed ownership under section 27 of the Income Tax Act. As per section 27, The following persons, though not legal owners, they are the beneficial owners, though not legal owners of a property, are deemed to be owners for the purpose of section 22 to 26, that is for the purpose of calculating the income from house property. First, transfer to a spouse otherwise than for adequate consideration. Transferor is deemed to be the owner of the transferred property in these cases, except in case of transfer to spouse in connection with an agreement to live apart. So first condition is transfer to a spouse otherwise than for adequate condition. In that case, the transferor, being the beneficial owner, will be termed as deemed owner, and accordingly the income from such house property will be taxable in the hands of the beneficial owner, in the hands of the transferor under section 27. Second point, transfer to a minor child otherwise than for adequate condition, otherwise than for adequate consideration. Transferor would be deemed, transferor would be deemed to be owner of the house property transferred, except in case of transfer to a minor married daughter. Note, where cash is transferred to spouse, minor child, and the transferee acquires property out of such cash, then the transferor shall not be treated as the deemed owner of the house property. However, clubbing provisions will continue to apply. So this is a sort of exception over here, and also for minor daughter, property transfer to a minor daughter, this is an exception. Third point, holder of an impatible estate. Impatible estate is a property which is not legally divisible. The holder of an impatible estate shall be deemed to be the individual owner of all the properties comprised in that estate. After enactment of Hindu Succession Act 1956, all the properties comprised in an impatible asset by custom is to be assessed in the hands in the status of HUF. However, Section 27(2) will continue to be applicable in relation to impatible estates by grant or covenant agreement. So, the owner of the impatible estate will continue be the deemed owner of all the properties comprised in that estate, and he will be the deemed owner for the purpose of calculation of income from house property as per section 27. Next, member of a cooperative society, etc. A member of a cooperative society, company, or other association of persons to whom a building or part thereof is allotted or leased under a house building scheme of a society, company, association shall be deemed to be the owner of that building or part thereof allotted to him, although the cooperative society, company, association is the legal owner of that building. So, the member of a cooperative society or a company or association of person to whom the flat is allotted, to whom the house is allotted, will be deemed to be owner. Person in possession of a property. In this, the Transfer of Property Act applies, wherein though there is no registration done, but the person is in possession of the property and the substantial amount on the property has been paid. In such a scenario, even if the registration is done at a subsequent date, the owner, the purchaser, the buyer will be deemed to be owner. So, person in possession of a property, person who is allowed to take or retain the possession of any building or part thereof in part performance of a contract of the nature referred to in section 53A of the Transfer of Property Act shall be deemed owner of that property. This would include cases where the possession of the property has been handed over to the buyer, sale consideration has been paid or promised to be paid to the seller by the buyer. Sale deed has not been executed in favor of the buyer, although certain other documents like power of attorney, agreement to sell, will, etc., have been executed. In all the above cases, the buyer would be deemed to be the owner of the property, although it is not registered in his name. So in those cases also the buyer will be deemed to be owner. Next is person having right in a property for a period not less than 12 years. So for a period of more than 12 years, if the person has a right in that property, even if he's not the owner, then he will be deemed to be owner. On a screen, a person who acquires any rights in or with respect to any building or any part thereof by virtue of any transaction as is referred to in section 269 UAF, that is transferred by way of lease of not less than 12 years, shall be deemed to be the owner of that building or part thereof, except in case the person acquiring any rights by way of lease from month to month or a period not exceeding 1 year, such person will not be deemed to be the owner. And the Bare Act, section 27, for the purpose of section 22 to 26, that is for the purpose of calculating the income from house property, an individual who transfers otherwise than for adequate consideration any house property to his or her spouse, not being a transferring connection with an agreement to live apart, which is an exception, or to a minor child, not being a married daughter, again an exception to the minor child, shall be deemed to be owner of the house property so transferred. Next, the holder of the impatible estate, again start. Second point, the holder of the impatible estate shall be deemed to be the individual owner of all the properties comprised in the state. Of all the properties, he will be deemed to be owner. Third point, a member of a cooperative society, company, or association of persons to whom a building or part thereof is allotted or leased under a house building scheme of the society, company, or association, as the case may be, shall be deemed to be the owner of that building or part thereof. Next is, next is a person who is allowed to take or retain possession of any building or part thereof in a part performance of a contract of the nature referred to in section 53A of the Transfer of Property Act shall be deemed to be the owner of that building or part thereof. Next point is person who acquires any rights, excluding any rights by way of lease from month to month or a period not exceeding 1 year in or respect to any building or part thereof by virtue of any transaction as is referred to in clause F of section 269 UA shall be deemed to be the owner of that building or part thereof. 6.1 be relevant in this case. So in this section we have studied what is who will be deemed to be owner under section 27. It could be the transferor, which is with the property is transferred to a spouse other than for an adequate consideration, transferred to a minor child otherwise than for adequate consideration, holder, the owner of the impatible estate, member of a cooperative society, person in possession of a property, and as per Transfer of Property Act, even if there is a part performance, he will be deemed to be owner. And the last point is right in the property for a period of not less than 12 years. Thank you.